Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Wednesday, January 10th, 2024. Let's take a look at the charts. I'll start with the big picture, working my way into the day itself. And that is, a long-term buy signal, actually, last May when we settled above the 163.89 to 165.31 band of channel resistance, now support, put out a July high, fell back to this support several months later, held very nicely, and then on the way up, the market not only tested but quickly took out the 180.15 descending channel top. This is a formation that we visited last week, and having done so, the market now inclined for meaningful recovery. That 180.15 level was considered a 3 to 5 week objective, as you recall. Anyway, I don't show that anywhere on the charts. I'm looking around as I speak. I'm looking for this channel bottom that we settled below a couple of weeks ago, and it was considered a 3 to 5 week sell signal, actually, and it all occurred in about as many days. So I can continue with this chart here if we're talking the day itself. Still inclined for recovery. Just a reminder, above that 180.15 channel top, same formation on the daily chart at 179.48, forming a range of support, able to absorb selling not only for the day, not only for the week, not only through February, but even perhaps into later year, as the longer-term dynamic remains bullish, secondarily so, above 179.48, 180.15. And I mean secondarily so because primarily above the low to mid 160s, secondarily above the low 180s. This 235.03 formation in reach by some point this year. I mean, there are little levels all the way up, and I'll get to that here in just a moment, but I'll jump back to this chart. For the day, 182.76, the high of the low, actually contained Tuesday's lows pretty well, and we came off of it. We still closed negative on the day, but I still see this as a constructive market. I do see, where are you? I really don't have them here, but I'm going to jump to this chart here, 187.60. Is that in reach today? Yeah, it actually is. I'm not expecting it, but I would not be surprised, and neither should you, if we happen to test 187.60, especially after coming off of long-term support as we have and closing above the high of the low as we did on Monday. We should test 187.60 over the next day or two, and if today can contain daily buying pressures. Now, closing above 187.60 should not come as a great surprise, and if so, this 191.43 descending two-thirds speed line based in part on last week's low would be expected within 1 to 3 days. So in terms of the 3 to 5 day swing trade, you're obviously bottom picking the 180.15 level, as you may have just a few days ago. I think that was Friday of last week. And that is a good day trade, 3 to 5 day swing trade, 3 to 5 week swing trade, and beyond. So, doesn't really matter what your time horizon is normally for trading. The 180.15 level is well suited for all of the above. A 182.76 today, able to contain intraday weakness, 187.60 in reach, where a daily high can be made. Now, should you short the market? I think you can sell the market here if you're already long. I would not short the market aggressively, although that is entirely up to you. And you may see other things on intraday charts, what have you, that might encourage you to do so. And I don't have a problem with that. I just know that if we close above 187.60, 191.43 is likely, possibly the very next day, Friday. So just keep that in mind. Keep in mind that having tested the low 180s, I've been mentioning 191.43 at one point as a 2 to 3 week target. But with presently still expanded volatility to some extent, we could reach 191.43 potentially by tomorrow's close if we settle today above 187.60. 191.43, let's call it a 1 to 2 week target above 180.15 and a 1 to 2 day target above 187.60 can contain buying through next week. From here, we can give it back into the low 180s again within a week or two of doing so. I can say can give it back and not should give it back because of the longer-term bullish dynamic that continues above 180.15. In fact, I do see us closing above 191.43 over the next couple of weeks. The question is whether we test it over the next few days, fall back into the low 180s before running back into, this is a steeply descending line, so I'm comfortable saying over the next couple of weeks because, by early February, by the end of January, you can see how narrow this area will be. And I do think the likelier outcome is that we close above 191.43. And if we do, as I've been saying, I haven't drawn it out yet, but there is a channel top using these lows, same angle, coming up off this high that takes us into the 205, 210 area. And I've also been saying this, that following the testing of the low 180s, or as we are testing the low 180s, you could begin, if you're more of a 2 to 3 month swing trader or near-term investor, you could look for the 205, 210 area as a 2 to 3 month target. And if over the next week or two we close above 191.43, then we're probably 3 to 5 weeks away from reaching this 205, 210 area. I haven't drawn it out yet, but I will get to it soon. Let's talk downside today. Breaking or opening below 182.76 does signal 180.15 again, combined with 179.48 channel top, able to contain selling not only for the day, but also through next week, through February, and even into later year. If we do close below 179.48 today, and I don't see that happening, then we should within a day or two test this 176.34 formation, where we could certainly bottom out for the day. On an intra-week basis, we can fill in this this band for several days. But I will go back to this chart and just remind you that if we close this week tomorrow below 180.15, I do see a 3 to 5 week downside likelihood for yet another test of this low to mid 160s long-term support, where we could bottom out once again into later year and turn higher again from there. So is there anything else that needs to be said? I'm going to jump back to this chart and just mention, you know, the 2 to 3 week time frame, buying the low 180s, selling the low 190s dropping at an aggressive pace, likely to give way over the next couple of weeks to continued buying pressures. And if we close sooner than later above 190, you should reach for the 205, 210 area, which is a long-term 2 to 3 month channel top right now and climbing. I'll give you that precise point here soon, I promise. You know what? That's all I really have. Please click like, share, subscribe. Check out wickedstocks.com for that 5-day free trial. You got nothing to lose, literally, other than your time in watching the daily Triple Q, the daily SPY report, our 2 stock picks that we put out every week. We've already put out 2 this week, Adobe and Bungie. You can check all that out for no cost. Bail out after 5 days if you so prefer, but I don't think you will prefer to do that after you've checked us out for 5 days. So that's all I have to say about that. I'm going to leave it at that. Please click like, share, subscribe. I'll be back tomorrow with Thursday's Apple report. You have a great day.